This is All India Radio. In the program Spotlight, now we bring you a discussion on government efforts to bring down non-performing assets bearing fruits. Huge jump in profits of public sector banks. The participants are Professor Yamini Agarwal, Economic Analyst, and V. Ravi Kumar, AIR Correspondent.
Dr. Yamini, Finance Minister Nirmala Sitharaman tweeted that in the second quarter this year, that is July to September 2022, the profits of public sector banks have soared to 25,685 crores. And if you consider the H1, that is April to September 2022 period, the total profits have soared to almost 41,000 crores. In FY18, if we see, only 2 public sector banks reported a profit, and if you see in FY21, only 2 reported a loss. It was a complete change of scenario. And in FY22, all 12 reported profits. Dr. Yamini, help us unpack the various measures taken over the last few years by the government to bring down bad loans in public sector banks.
Well, there has been a 4R policy that has been followed by the government. One is transparent recognition of the stressed assets and to take an immediate action on it. Second is to find out an immediate resolution to it, whether it's a one-time resolution or whether it is through the IBC, which changes the relationship between the creditor and the debtor, where the control of owners as well as promoters as well as willful defaulters has been taken away during the resolution process. Further, the owners, promoters and the willful defaulters are not allowed to raise funds from the market. The third step that the government has been doing is recapitalizing the public sector banks, where 3.16 lakh crores has been recapitalized in the public sector banks, of which about 2.46 lakh crores has been given by the government and 0.66 has been mobilized by the public sector banks themselves. The fourth factor, which is a very important factor, is a complete change in the administrative reforms in the banks themselves, where we see that when you talk about loan sanctioning, the board approvals for that is necessary for the loans, which require certain clearances and approvals for specifically on disbursements which are supposed to be made, also on the appraisal, non-fund as well as tail risk appraisal of projects. Also, another important is how the cash flows are there and how they are trailing in the businesses. Another important aspect which they look at is the fact that most of the businesses have group balance sheets. So how do the group balance sheets look? They scrutinize that also. Another important factor which the government has played an important role is in terms of dividing the monitoring as well as the sanctioning authorities of the bank for the loans. So the monitoring unit is different now from the sanctioning unit, and the monitoring unit consists of very well-known experts from the finance domain and from their domain knowledge and the technical knowledge, which continuously monitor the loan to ensure that it does not become a stressed asset, and wherever is needed, the requisite technical help or other help may be provided and an action is taken in that regards. Another important reform which has been done is that there has been strong focus on third-party data resources, which means there is a credit repository for information of large credits which has been created by the RBI, where the information of the large creditors is kept and is transmitted between the financial institutions for the knowledge of how much credit is being made available to different creditors and what is their status in terms of their repayments. Another important is credit institutions, which have credit institutions in which all banks have been asked to become a part of it, so that they inform the institution which credits they are being given and how do they rate their people who are taking the loans. So these are certain specific measures which have been taken, which have been able to reduce the NPAs by over 5 lakh crores in the banks.
So you mentioned a 4R framework, which basically is recognition of NPAs, resolution of bad loans, recapitalization of banks, and reforms in banking sector. So if I was to look at some other things also that have happened in the AQR, the Asset Quality Review was initiated in 2015. So most of these things have been unpacking since then. So what are the other things apart from this framework that the government has been using that has happened? So we speak about IBC, we speak about NCLT, all these things have started unpacking over the last few years. And of course, the pandemic came in between as well. And credit growth suddenly stopped. So how have all these factors impinged upon this entire final scenario that we have where the profitability has shot up?
The overall banking system, there has been certain mergers that had been initiated primarily to take care of the NPAs, because the NPAs was a very serious problem to the entire banking system. And hence the merger of the banks into SBI and into other banks made it possible for strengthening the banking system and providing them the necessary cushion of capital as well as administrative support for it. Another important thing is that when the COVID scenario was going on, to provide for support to the economy, it was informed to the banks that they would not recognize NPAs at that moment, and a moratorium was given to people, primarily to help the banks as well as to the businesses and the economy to sustain the credit that is going on in the markets. The third thing that played an important role for the banks was that the interest rates were very low. So they had given loans at a high interest rate, and when the interest rates went low, the deposits were available at a lower rate versus the lending rate that was there, which played a role in terms of the spread that was there, and that added to the profits of the banks. Another important thing that has added to the overall framework is there has been a recovery to the economy, and thanks to the vaccination program, the economy has come back to its revival phase, which had faced a lockdown at some point. And because of that recovery, people are now again at the pre-COVID levels. Also, they are doing their businesses and reinvesting again, because of which they can be seen a huge amount of a credit growth in the banking sector, which has also played an important role. Another important step which the government took was it initiated the phase of a bad bank which was there as a scheme, whereby the bank was given a guarantee of over 30,000 crores as government guarantee and was allowed that big ticket loans may be surrendered to the bad bank, in lieu of which 15% of cash would be given, and others, the rest of the amount would be given in terms of the security, which added confidence to the entire banking system to ensure that if they had bad or big loans, they will still get capital infusion. So these were certain factors which added on to the advantage of most of the banking sector in the economy.
If you see the figures during FY 21-22, these 12 PSBs had doubled their net profits during FY 21-22, and the collective profits of the 12 state-owned banks during that fisc was 66,539 crores, which is almost double over the 31,000 odd crores in the fisc before that. And we are seeing in terms of the pattern, of course, from FY 18 where only 2 banks profitable, FY 21 we saw that only 2 were unprofitable or in losses. Now all the 12 are in profit, but we are seeing a certain trend here that 2 of the 12 lenders, one is Punjab National Bank and the other is Bank of India, so they're still profitable, but they have a decline in profits. Is this just trend variation, or is there something more to read into this?
Well, it's important to recognize that the NPA resolutions have had a major role to play, and also an important role to play were the mergers. So they both had a role to play in terms of both the banks. Also, the businesses in many of the banks, whether they did well or they did not do well, also depended upon economic situations that were going on. When we talk about businesses overall, because of COVID and the bleak economic conditions in the past 2 years, specifically because of COVID, there have been situations where the banks have not been able to do well. But because of the IBC, there have been large number of resolutions that have been able to give one-time settlements or other settlements which have brought back the capital which could be further loaned out. So these have been some specific factors. I also feel that lately the fact that the interest rates are on a rise, that will play an important role in the profitability of the banks in future. But because there is a credit growth that continues to be there, it will continue to keep the system robust in terms of both the credit being given as well as the deposit being taken.
You mentioned credit growth. So credit growth is something that has been worrisome in the last few years for all banks, not only just the PSU banks. And normally when we talk of credit, we look at retail and we look at wholesale as two, or corporate as two segments. Are these PSU banks now moving more towards retail, or is it less towards retail? How's the scenario panning out?
When we talk about public sector banks, the public sector banks have a greater reach and confidence among the public because they're believed to be from the government. People trust them in terms of their deposits, as well as they trust their policies, which are credit policies for the loans. So most of them, when you go to retail segment, they are more seen for the poor as well as for the middle segment to be approaching to the public sector banks. the private sector banks are more largely very commercial in terms of their actions, and many times people don't feel very convenient to reach out to them. Also, another important aspect that is seen with the public sector banks is that they get projects which are of a much larger scale but do involve the government also. So many of the government projects are also undertaken by the public sector banks which are not taken up by the private sector banks. So this profiling does make a lot of difference in terms of the profits at which a bank works.
So we mentioned the reasons for this outstanding jump in profits of public sector banks. You mentioned recognition of NPAs, resolution of bad loans, recapitalization, reforms. You mentioned mergers. You mentioned the low interest rates. You mentioned IBC, NCLT. Is any one of these measures a silver bullet, or all of them have their own role to play?
It has been something to create an entire framework which supports the entire banking system. So it was not that one particular set of injection like a recapitalization would have worked, but it was to ensure that the entire administrative framework, whether it is transparent recognition of the NPAs to the sanctioning of or disbursement of the loans, or to the resolution that the creditors today have with the IBC, all supports the system as such, which brings about a framework which is much more stronger today in terms of the credit growth also, and in terms of supporting for the banking system overall.
So let's double click on a few of these factors. One of them was mergers. So these 10 public sector banks have been merged into 4, and there was expectation that you would get synergistic savings and you will also get economies of scale. Has that happened in reality?
It's too early to comment on that because one cannot really say that synergies of large systems really come together within a framework of some time. But it does make a difference because with public sector banks, one needs to recognize that they are having physical presence in most of the country and in those regions which have not been touched by the private players, and even in those businesses which are not considered to be profitable but are more socially responsible. Also, they have a strong role to play in mobilization of small unit funds. Let's say the PM Jan Dhan Yojana was one of the key mobilization schemes which the PSU units played more key role than the other units. Though the significance of private players cannot be reduced, but the fact is that the commercial interest or the commercial outlook the private banks hold is very different to the scope and the working of a public sector bank in terms of its reach as well as in terms of its confidence that people have on these banks.
So it's very clear, Dr. Yamini, that when Ms. Sitaraman said the government's efforts to reduce bad loans are yielding results, so all these factors clearly lay out that fact that that is true. But let's also now look towards the future and look at those aspects which probably need to be done further to make sure that this trend of profitability or increase in profitability sustains. So one of them was about resolution of bad loans that you mentioned. So has the cleanup of bad loans now been done, or is there something more to be done to ensure that we do not land up in a situation like 2013 again?
Well, it's important that when the loans are given with the requisite documents, and the documents are not so cumbersome that the real people who want the loans do not get the loans. So people who are willing to pay and who can pay and who are wanting to take the loans should be able to get these loans. Another important aspect is that the bank employees have never been made accountable for the loans that they have been given, because they get transferred, they get promoted for the loans that they have given. But by the time the recoveries are there, they are not held responsible for them and there are no actions taken for them, which also needs to be keeping in mind the appraisals of the bank employees should be done, so that people know that an employee just doesn't sanction the loan and gets the promotion and moves up, but also is responsible for creating the responsible returns for the banks.
Dr. Yamini, thank you for coming to All India Radio and helping us understand this story better.
Thank you.
You are listening to a discussion on government efforts to bring down non-performing assets bearing fruits. Huge jump in profits of public sector banks. The participants were Professor Yamini Agarwal, Economic Analyst, and V. Ravi Kumar, AIR Correspondent. This program was produced and presented by the News Services Division of All India Radio. You can listen to it on our mobile app, News on AIR. This program is also available on our YouTube channel, News on AIR Official. You may email your opinion about this program at airnsttalks@gmail.com.